The total annual return for DGRO at the time of recording this is 11.27%, while for TDIV it is a bit below that at 10.76%. The past 1 year return for DGRO is much higher at 15.54% compared to TDIV 7.81%. However, for the past 3 years, DGRO has returned 9.99%, while TDIV has achieved 16.9% annual return for that time frame. If we go to the 5 years, DGRO has an 11.67% annual return and TDIV 10.63%. So looking at the total performance, DGRO has a slight advantage over TDIV. There is a massive difference in the 1 year and 3 year period, with the 1 year DGRO crushing TDIV and for the 3 year the reverse. While at the time frame of 5 years and since the inception of the funds, the returns are fairly similar with an advantage for DGRO. Let's now focus on the dividend growth. In order to save you time, I have previewed the numbers for you so that we can get straight to it. Here we can see that for the past 12 months and the past 3 years, TDIV has had huge dividend increases, way higher than those of DGRO. I mean, we're talking 16.13% in the last year and 31.55% compounded annual growth rate for the past 3 years on the part of TDIV. Now, for everyone who is new to investing, I just want to warn you that 30% yearly increase is totally unsustainable and cannot last, but we can see that recently the ETF's dividends have been growing like mad, which obviously shows the fund has momentum. If we zoom out a bit, DGRO gains the advantage, although not with a lot, with 10.18% CAGR for the past 5 years and 9.47% CAGR since inception, compared to the 7.56% and 8.22% of TDIV. Now we come to the dividend yield part. If you have been paying attention up until now, you have seen that the two ETFs are pretty similar when it comes to performance of both the total returns and the dividend growth. One will outperform on a certain time frame, then the other one on another, and there is nothing special there. So you might be thinking, Ognan, did you just clickbait us? Why do you say in the title of the video that TDIV beats DGRO? Well, here is why. If we take a look at DGRO's current dividend yield, which is the current income you get when investing in the fund, it is 2.32%. The VanEck Dividend Leaders ETF, however, gives you a current dividend yield of 4.78%. So if we go back to my fancy table and compare them, you will see that TDIV's dividend is more than double that of DGRO. This is something important you need to understand when it comes to investing. The difference between 2% and 4% might seem small because it's just 2%. But it isn't 2%, it is 100%. That means that for all the comparable stats we just saw when it comes to dividend growth and total returns, the income you will be getting immediately if you invest in TDIV is more than double that of DGRO. Personally, when I see two investments with comparable other characteristics and one gives me double the income of the other, I tend to gravitate towards the one with a higher income. As a person currently living from my dividends, I can appreciate the fact that if I want to, I can get the money and spend it, and if I decide, I can always reinvest it to supercharge my growth. And obviously, in the case of TDIV, you are not sacrificing the current yield for the growth of the dividend, which has been pretty good and even spectacular lately. Now, this is not a recommendation to invest in TDIV, and if you want to see my top 4 favorite stocks and ETFs for the current economic and geopolitical environment we are in, you can go to the description and get the free report straight to your email. Obviously, I'm not your advisor, and this is not financial advice, and I'm just expressing my opinion. With that said, to be completely fair to DGRO, I wanted to include the next 3 items in our comparison table, where it has the clear advantage. The first one is that the expense ratio of DGRO being a BlackRock ETF is of course a lot lower. However, I don't find that as a problem since it's already reflected in the performance numbers. When it comes to the number of holdings though, DGRO is way more diversified with 424 holdings versus 99 for TDIV. Now, 99 is still a big number, but it's obviously not 400. And last, DGRO is a way bigger ETF with $26.54 billion market cap compared to TDIV's 600 million. However, this is completely normal and wouldn't worry me since one is domiciled in the USA and the other in Netherlands, and the American ETFs tend to be much larger than those in Europe, which isn't a sign of weakness. Moving to the sector of the funds, currently DGRO has technology, financials, and healthcare as its top sectors, while TDIV has financials, materials, and energy as its top 3. My personal issue here is that the VanEck ETF is super overweight financials, which are not my favorite sector, but as you can see, the performance of the fund seems to be okay. Also, financials in general pay higher yields, which certainly helps TDIV have 2 times higher dividend yield than DGRO. On the other hand, what I like about TDIV's portfolio is that it is pretty well diversified across countries and continents, as you can see here. This is unlike DGRO, which is 100% concentrated in the USA. TDIV still has the USA as the top country, but you can also see the presence of France, Germany, Canada, UK, Japan, Australia, and others. There are other things I personally like to check in ETFs in order to decide whether they are a good investment or not, and I invite you to join my free investing masterclass, which you can find in the link in the description. It is a free event where I talk in depth about my investing strategy, and also I give you an opportunity to work closer with me by the end of it. After you have signed up for the masterclass, as I said in the beginning, if you want a more in-depth review of DGRO, you can check the video that should have appeared on your screen next. It is a 26-minute detailed review of the fund and is part of my ETF analysis series.